Hello everyone, welcome to the channel. This is just the disclaimer part of the video, and this is to inform that none of this is financial advice of any kind. Whatever actions that you might be taking with your own money in stock market should be done with your own due diligence and your own research, and always apply stop losses to all your positions and maintain proper position size, because remember that this is a long term game, and this like you cannot make a lot of money by betting on a single trade. So hope you people enjoy this video. So welcome to today's video, and in today's video we will be analyzing nifty 50 and bank nifty along with it as well, because why not. And yeah, so we'll be starting. These are the previous drawings. Whatever you see are just previous analysis, and they are for some long term analysis, and it might not be very much help, might like it might be helpful for tomorrow, but yeah, we will be making a plan for tomorrow. So yes, the structure is looking, the previous low has been broken on the longer time frames. I just assign a few colors to specific time frames, and for 4 hours it's blue, and for daily it's red, and for hourly it is orange. But anyways, we will be starting. So this previous low was violated, this previous orange line was violated, and we should be looking more deeply into this. So also we'll be taking a look at a little bit of volume as well. So what we can see here is that there was a particular range on when was it formed? Yeah, from 13th of June till 15th of June. Upon breaking of that range, the market fell drastically on the 16th. This fall right here was after this range was broken, and whatever might be the reason, but technically that is what it looks like. And so, and also this up move that absorbed this whole down move, that happened pretty quick. That was because of lower volume in these spaces. That also we'll be looking into that as well. But yes, for now what we can see clearly is that there are two ranges, uh, one on the lower end and one on the upper side, and I feel that this lower range would act as support in future, and when we extend the upper range, that is the exact place where today market seemed to take a little bit of resistance, although we cannot say that it was a proper resistance right now. And yeah, by the way, the green color is for the 15-minute time frame and lower. Also 5 minute is also a lower time frame in my view, so that is the reason why all the lower time frames have the same color, that is green. And yeah, so the chart is pretty easy to trade right now. I'll be just marking out the levels where you can short the market and where you can long the market if you have a bullish bias or you're trying to accumulate for a longer run. So yes, these green levels are where you should be shorting the market, although always take proper risk management and add stop losses to your positions, whatever the case might be. You should always have a stop loss. And yeah, so let us say that you actually take if at all you take a short position in this price range, that is from 17 no 15704. Actually, not 15704. 15704 has already been tested, so I feel that somewhere above 15750. Does it look like that? Wait, let me go and look at it. Yeah, so 15750 is the place where you can actually start building shorts, and up to 157, so 15805. So that is where you can start shorting. And let's say that in a case very short in that region, your targets would be, let me look at it. Your targets would be this valley around here. So I guess this, yeah. So your first target can be around this place. No, your first target would be this 15,494. So that would give you around a 1.8 risk to reward ratio, provided that you put a stop loss at 15,917, and your take profit would be around 15,494. So that gives you 270 points towards the downside in your trade, and this would be your first target. So let me just bring it here and we'll name it first target one, and let's make it green, 14 bold, right? And this would be a second target, so 15,365, right? So 15,365 would be your second target. So target 2, and the same settings. Yeah, so these two would be your targets towards the downside. And let us say that you are an investor and you're looking to invest into the markets. So as an investor, you should always look at the larger time frames, but today we'll be looking at smaller time frames because it's already at the 2021 highs, 2021 Feb highs, above which it also accumulated for quite a bit of time in the past. In June of 2021, this range here is where it accumulated, or you can say consolidated above the highs of that year, and after which the market shot up and it's right back at it to test it again. And as you can see in the daily time frame, yesterday on 16th of June, which was a major fall, after 368 points of fall, it kind of took a small support. Still not sure though, it can be a liquidity run towards the upside, a sweep high of positions that are having this stop losses. The market could go up, fill up this gap, and then come down. Sorry for the bad drawing, but it could look something like this. But yeah, I feel that this range is this price range looks pretty good to accumulate for the long run. Somewhere, if you're having funds to hold for 6 to 8 months or more than that, that would be even better. But just to make some few more levels the way you can accumulate for the long run, are these levels these are actually support levels that might act as such. So yes, 15,084. Does it look like? Yeah, this wasn't tested though. So that, and 14,755. After which I think, yeah, this 14,322 also looks. This let me just explain you the reason as to why I took 14,324, because this was a fake out in lower time frames. If yeah, the chart allows us to go that back, so let us try looking at it in 1 hour time frame. So yeah, this range, this support level, it came down, tried to make it closed for 1 day here. This close right around this place. Where do I make it? Yeah, so this close was kind of a sweep low of people that are having this stop loss below these lows, and after it liquidated those people, or probably had a liquidation run, and then it started going upwards. So yes, well, that looks like it for right now. There are no proper trend lines as of right now. If you want, then I can I do see one trend line, but I don't see the point of that because it's still a very small, and it doesn't look really like kind of a trend line to me. Doesn't look like a trend line to me. Extend right, and yeah. So yeah, this can be a trend line if you would like to see it. If you want more confluences in order to trade, well, this might be a trend line for you. if you find some kind of rejection. Also, one more reason to have a bearish bias is because this range, usually whatever happens whenever you make a range and then there's some kind of bearish candlestick patterns in that range or below that range, then that seems like a clear sign for shorting the market. And this range that was formed from 13th of June till 15th of June, when you switch to 1 hour time frames, you see that there's a bearish engulfing candle. This candle right here, it's a bearish engulfing candle. And yeah, if the price moves upwards, you can try to short the market with proper risk to reward ratio, and I hope that it might work for you. Like it should be working for you. And let me just give you an example of how these ranges work whenever there's a breakdown of the range. This looks like a good place to me to find examples. So yeah, let's switch to 30-minute and we can find a proper example here. So this here and was this now. So what usually happens is that once the range is broken, it tries to go somewhere to the mid of the range, or it tries to penetrate the range a little bit, after which it finds one or the other reason, which in this case was trend line rejection. And after finding the trend line rejection, it starts falling off. That was the example for 16th Feb 2022. But something like that or something similar to that is what I see happening here. So similarly, we also have a trend line here, and this range, it has been trying to penetrate it a little bit more, and I feel that the proper shorting level would be from 15,750 onwards. And if you see any kind of bearish price action in lower time frames, that is 15 minutes or 5 minutes, then you can expect a down move to 15,500, I guess, 250 point down move. So that's it for Nifty. Let's also take a look at Bank Nifty for now. Also, yeah, the reason that I was trying to say that today it had a good up move and it absorbed the down move that it had on 16th of June. So all this while on this day, what happens is when there's a lot of short positions, you only see the building of position in these consolidation ranges. This range, let us just take this whole part. It's Nifty 50. We need to get to Nifty 50 futures. So yeah, so when you go to this whole range, this blue and yellow bars that you're seeing to the left of the screen are what you call as volume bars, or the volume of future lots that have been traded in that region. So what also this analysis is usually mostly made after the move has been done, so that you can find future areas of confluences or future areas of value. And what you can derive from this whole move is that in this region for 2 or 3 days there were short positions being built, and that is the reason why such high volumes are there. After which, once it broke this lower levels, right, after it broke these lower levels, the market continuously started falling. Maybe there might be two reasons. One might be because long positions might have had their stop losses there, and that triggered the market sell orders, and fueled with that and the short positions already building up, the market continuously went for a fall. And around this region is where again there you can see large volumes being found, and this is where there might be short covering or maybe long positions being built up. So either ways, whether it is short position short covering or long positions being built up, that usually fuels the market up with a little bit of money being flowed into the market, and that is the reason why um, the market shot up. And because there was very less volume or orders that were being stuck in this region, these prices or this price region was very easily broken through, and price just flowed through that region, so there was no much issue in that. But as you can see, right around this volume, this big volume bar, right around this big volume bar, this one, you can see that the market has taken some rejection and has closed down like maybe 200 points, no, not 200 points, sorry, yeah, and has closed down around 75 points from the high of that day. So that was about Nifty and what it did today and what it can be doing in the coming days. So yes, let's also take a look at Bank Nifty. I did take a look at Bank Nifty, but I didn't find any good what do you say, positions, or I didn't find any good opportunities in Bank Nifty, because Bank Nifty actually seems a lot more stronger than Nifty. Nifty had actually not broken through the range or even came towards the mid of the range, but as you can see here in Bank Nifty, it has reached almost the top of the range and has taken some hit during the closing hours. But yeah, that's the reason why I didn't like find actually any good trades on Bank Nifty today. And although this was a level on the daily, this whole level was on the daily, and that is where the rejection has taken place. This whole bearish engulfing candle kind of candlestick pattern, but that didn't really seem like a trade to be made, because also in such high time frames, what do you say, levels, you often see deviations as such when you are trading in smaller time frames. Like these time frames, they only make sense when you look at it in a daily chart, because that is when you can find rejections here, like here, this part. So all these wicks of rejection, they actually take time to form, and if you try to take a look at it in smaller time frames, you will always be finding yourself in a choppy kind of a market. So that is the reason why all these levels are color coded, and I only work with certain levels in certain time frames. Like as you can see, the market came down and then it went up, and then it started hitting stop losses of people holding short positions. Then again it came down, might have hit stop losses of people having long positions, until it finally decided to go up. So that is the reason why. And yeah, so other than that, I don't really find any good space. So I just see one place where you can actually build a safe short position. So yes, this should be green, and yeah, so you can build short positions around 34,372, which looks like a big target as of right now. Yeah, 3%, 1,000 points up. And for Bank Nifty, if you are trying to look for long positions, one position that you actually can try to see is 32,700, this part. So this is where you can actually try and build a long position in the coming days. Also, you have to take into consideration the price action of smaller candles at that point of time. So you should be having a proper stop loss and proper position size. And if you do have, then this would be your trade. 32,700 would be your opening price for the long position, and you can target 1,000 points from there around 33,774, and your stop loss would be a 500 point stop loss. So yeah, that is it. And yeah, that looks like it for Bank Nifty. Thank you. And if you want to look at more analysis as just like these in the future, do take a look in the description and subscribe to the channel. You can find my website's link in the description, where I constantly post about these analysis, sorry. And also you can add yourself to my subscribers list, and you get an update email whenever I make a post. Thank you.